Physical gold and silver have the broadest base of buyer because it's used inside of every single area of the global economy, both of them, gold and silver. Broadest base of buyer. What do you want to go into a fight with? One little pocket knife or an arsenal? That's what we're talking about here. That's exactly what we're talking about.
Throughout history, gold, silver, and other precious metals have been highly sought after and considered the most valuable commodities someone could own. When it comes to taking a closer look at the best investment strategy for your particular situation or diversifying an existing investment portfolio to mitigate risk, it's true that premium precious metals offer a reliable hedge against price volatility in the long term. Two of the commodities most sought after by professional investors are gold and silver bullion. Their appeal is probably partly due to the familiarity we have with these precious metals. In today's video, we will share why Lynette Zang believes that economic bubble about to burst and silver and gold bull run is about to start. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update.
You don't like what the government's doing, you pull the gold out of the system and it creates restrictions around what the government can do. And the central bank. Yeah, I'm all for it. The gold standard puts control of the money supply with the market instead of the Fed. And we vote with our purses. That's true when this comes back, but that's true right now. If you buy stocks or bonds or ETFs or annuities, or you stay in cash, or you buy cryptocurrencies, that's a vote of confidence in the system, current and new.
Physical gold and silver have the largest buyer base as they're used in all areas of the global economy. Gold and silver, broader buyer base. They're repositioning themselves to support the dollar with gold, but they can't do that until that mountain of debt burns into a hyperinflationary depression. It could be hyperdeflation. Too bad. They're really the same thing. It's just the other side. There's only one way to fight inflation. It's with deflation. And there's only one way to fight deflation, and that's with inflation. So it's quite simple. But what the story also tells us is that when all trust in the coin is lost, they put a gold component back into that coin so that the public will trust it and use it again 100% of the time. Now, the CBDC, the digital dollar that they're releasing, that won't be the end of it. If we have this digital dollar, there will be no more inflation. That's how they sell it to us. You'll not be able to guarantee the preservation of your heritage with it because it will be taken away from you. Because we're entering this next recession when the Fed pivots, it will make what it did in 2020 look like a stupid change. And hyperinflationary, but it's true. Because the economy, the American economy, needs a stable dollar, fixed exchange rates, and a money supply controlled by the market, not by the government. You don't like what the government is doing. You're taking the gold out of the system and creating restrictions on what the government can do. If you buy stocks or bonds or ETFs or annuities or stay in cash or buy crypto, that's a vote of confidence in the system, current and new. The gold standard means legal tender is defined as convertible into a certain amount of gold. So it doesn't have to be 100%, but it has to be something that can give enough confidence to the public and can stabilize that currency so that they are actually paid fairly for their work, which he wants you later. They already have all your buying power. Now they have to go through the premise of going into this fight, gold and silver physically in your possession. So what you really need to know is that we are in the final stage. The world is very fragile, as we hear it all over the world. The IMF, the BIS, even Jamie Dimon, who says we'll be in a recession in the next 6 to 9 months. It will be worse than a recession. The disparity between gold and silver during a recession or depression is explained by the different levels of industrial use. Gold has a relatively small number of industrial applications compared to the many uses of silver. During a recession, the decline in demand for industrial metals mitigates the positive impact that a recession could have on the price of silver. Demand continues to rise from investors looking for safe havens, but falls as manufacturers buy less silver for their products. Therefore, recessions and movements in the US markets have a greater positive impact on gold than on silver.
This is not a good place to be unless you have protection. Real money. That's what has withstood the test of time. So what you really need to know is that we are in the late stage. While I can't tell you it's Tuesday morning at 8:35, it very well could be. The world is very fragile.
That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.